Hello and welcome to Who Moves the Market. We are here at the end of the week with our brand new edition. And the stock that's moving the market today and moving a lot of expectations, by the way, is Reliance Industries. Yes, you would have already got the news by now. The company is moving one step forward in its endeavor of delisting its financial services business. Well, what will this mean for Reliance and actually for the entire landscape? Is it going to be a huge disruptive moment? How should we look at all the nitty-gritties in terms of the value that current shareholders, RIL shareholders can look forward to? Well, to demystify a lot of these issues, we have with us Deven Choksey of KR Choksey joining in on the show today. Deven, thank you so much for being with us and welcome to our digital show.
Thank you, Surabhi. Thank you for inviting me onto the digital show.
So, Deven, we have about the next 15 odd minutes to really discuss this threadbare. What we heard over the one-day holiday was Reliance moving forward with its plan, right? Because the 2nd of May is when the meeting of the creditors and shareholders will take place, and they'll hopefully give their blessings to this scheme of arrangement. And for the benefit of viewers, let me just quickly remind everybody's memory. What will happen is that existing RIL shareholders will get one share of this new demerged financial services entity for every one share that they hold in the company. Deven, your opening thoughts on the way this demerger is perhaps moving on course and what it could really imply?
Yeah, I think this is a necessity to basically drive the businesses of retail particularly and to a higher levels. I think the financial services are required to be provided for the growth of retail business, and I'll explain in a while. Today, they are targeting about 1 million Kirana merchants on their retail platform under the GeoMart services that they are offering. And these merchants also require the credit, I think, for holding the stock as well on a regular basis. This is something which they are targeting at this point of time, about 20% of the top merchant out of the addressable size of around 6 million merchants at this point of time. Assuming that these merchants require an average credit of around 5 lakh rupees, this is basically total addressable market for credit for merchant happening to be around 50 lakh crore AUM. Now, this is a huge market that they are addressing, and underlying business model is already in place. They already have the retail business going. They already plugged, I think, the retail business through the various mechanisms, including POS. So from a perspective of bringing further growth, finance was the only missing component, because with the finance coming in, the higher number of merchants also can be entered into the system. And at the same time, with the credit availability, I think the business also can expand for retail faster than 15% rate of growth at which it is currently growing. So to me, I think this looks a kind of win-win combination on one side for the merchant credit. On the other side, the retail customers that they have retail customers coming to their 14, 15,000 stores. They have the retail customers also, I think, on their various platforms, including the Geo mobile customers. They have retail customers on money control platform, and so on and so forth. Each of these customers are also target audience as far as the credit offering is concerned. And today, two main products sales maximum. One is a buy now, pay later kind of a product, which is selling maximum. And the second most important product which sells most is zero EMI. Both these products holds the potential for generating higher revenue for the company eventually from this stream as well.
Those are some pretty big numbers, Deven, that you're referring to. And by the way, viewers, I just want to sort of tell viewers as well that right now we are only talking about the lending part of the piece. Reliance has in the past sort of spoken about its intention of also getting into other avenues of financial services, which is asset management, which is insurance, which is payments. We'll talk about that later. But right now, the numbers that Deven referred to are only perhaps for the lending piece. So, Deven, if you could just dial back and, help people understand this further. Are you talking about 18,000 crores in net interest income, I mean, for instance, in the first year itself? And this is assuming what kind of estimates?
Well, I think it's a good point, Surabhi. They are starting the business with about 6 lakh crore worth of Reliance shares under the treasury. That means the net worth itself, I think, is a huge network to begin with. Now, assuming this particular net worth available to them, And if they end up leveraging this net worth 4 times, then possibly you're talking about 24, 25 lakh crore worth of market that they would be basically catering to on this net worth itself. However, that will not happen in one go, and that will probably take some time, as we all understand. Assuming that they will use only their current cash, which is available at 6 lakh crore in the balance sheet. On that, if you count only 3% NIM, then what you are talking about is, I think, a significantly large number of around 18,000 crores worth of net interest income. And if we start counting the possibility of pay now, buy now, pay later, and zero EMI kind of product for retail, which invariably, I think, under the subvention pricing model, they probably fetch higher amount of net interest income of around, or net interest margin of around 10%. If you count this particular possibility, then we are talking about a size of the revenue book, which is between 18,000 crore to somewhere around 60,000 crores. So let's see how exactly the blended deal comes out. But I think this is a kind of potential that you have. Definitely, it is not happening in 1 year. Definitely, it is not happening in immediate future. Maybe I think they will also taste the market, and the most important component of this particular thing is the fintech platform at the front. If they have a stronger fintech platform, then the book is available with them. Customers are available with them. So I think that should be a possibility hereafter.
Deven, listening to you, I really think that this could perhaps spell a bit of trouble for some of the incumbent players. I mean, we all know that when it comes to retail lending, zero cost EMIs, lending at places like a Chroma or some of these outlets, electronic stores, Bajaj Finance, for instance, has had a huge presence over there. So could this really spell trouble for some of the other NBFCs and the current incumbents?
Well, I think one need not, get into that particular space at this point of time, because if the technology is available and if the book is available, then possibly I think the equal opportunity is available to other players as well. In my viewpoint, technology is given, it is available. How you implement is more important. In case of Reliance, they have the distinct advantage. On one side, they have 15,000 plus stores on the ground. On the other side, they have got GeoMart kind of a digital platform already working in full-fledged manner. And at the same time, they have got a significant amount of mobile customer use base, which is available pan-India. So as a result of which, reaching to them is probably given, that is understood. Most of the franchisees would have struggled to acquire the customer. Here, this company has an inherent advantage of acquiring the customer because they already have the retail business, which is already 2,65,000 crore revenue book in place. So from the perspective of looking at the tapping the market, what you require is the digital fintech platform, which could possibly allow you to extend the credit at the click of a button. And should that happen, then possibly these numbers could happen much faster. And I think it would be interesting to watch out for.
Well, big plans and perhaps big numbers as well. I just want to, take a second to talk about Reliance's own rationale. Reliance, in its communication to the stock exchanges, also mentioned its own rationale behind the demerger. Very small 2 or 3 points. Number one, that of course you'll have a dedicated financial services entity. It will allow the company to adopt a suitable strategy, a differentiated strategy that suits the financial services landscape. Whether it is the risk profile, the leverage, or the kind of market dynamics that you have to take on board. And then, very importantly, the capability of attracting a different set of investors and stakeholders, perhaps looking at future partners as well, and of course, unlocking shareholder value. So, Deven, on the last bit, unlocking shareholder value, I think Reliance's shareholders have been waiting for a very long time to start getting different pieces of this giant whole, right? So you reckon that financial services is going to be first off the block, and then maybe the market is, of course, also waiting for a retail IPO, for a Geo IPO.
Yeah. I think the good part about Reliance is that they make the business grow first and then they hit the market. So in the case of Geo platform, also today it is running at a rate of around 1 lakh crore revenue, 50,000 crore worth of EBITDA. In case of Reliance Retail, also they are running at a revenue book of around 2 lakh 60, 70,000 crores in this financial year, and with a 7-8% EBITDA that they are earning. So I think, frankly, they have already built those businesses. in financial services, which is already taken care of. But the fact is that now it is getting separately listed, and it is going to be separately managed, which is fundamentally very important. They have different properties. One NBFC property, which we talked about. Second property that they have under them is Paybank, where their 30% partnership is with State Bank of India. Then they have got the distribution of financial or investment products in which you can count mutual fund, insurances, fixed deposits, and even equities. And I think on the top of it, I think they would hold the potential to come into the product segment itself, be it insurance company, be it mutual fund or AMC companies. So eventually, I think it would be a full scale business which will happen under this company. And that's where I believe that I think you hold significantly large potential as an investor to find unlocking of the value, and at the same time, I think grow the size of your investment significantly from this activity.
Sure, and they've got a veteran at the helm in the form of Mr. K.V. Kamath, who of course has built so many businesses. Of course, best known for ICICI and everything that he's given to the financial services sector in India. Now, Deven, I want to come to the stock. Of course, today it's finally looking, very excited. Reliance shares actually up 4.5% as we're speaking. But it has been such a rank underperformer, right? The Nifty is down 1.5% in the financial year that closes today. Reliance is down 11-12%. Do you think that this move could trigger maybe, some of a catch-up play in Reliance?
I'm sure. I think, see, this particular announcement of Geo Financial Services comes some time back, and thereafter the stock price has fallen. So market technicals have their own reasons, I think, for which the stock price behaves. In my viewpoint, fundamentals have always been counted from the day one, as far as I think the Geo Financial Services is concerned, when they announced the demerger. So from that perspective, I think this news and the market is reacting on this news, I think absolutely fair. And I would think that yes, I think underlying potential of Reliance is significantly higher, so the price should stabilize. However, I think the major problem in our market has been up till now that whenever the investors want to sell, they don't find enough amount of depth. As a result of which, they have been shorting the stocks into the futures and the options market. And this could probably drag the stock because the lack of depth, I think, is not letting them deliver those shares. This is where I think we have suffered maximum in some of the frontline stocks when the ETFs of the world they started taking the flight and they moved out of the country because of the reasons that is best, I think, addressable to them. But the fact is that I think the fundamentals remain absolutely in place for most of the good companies, including Reliance. And that is where I believe that I think any correction in the price for such kind of strength in the business is always a good opportunity for investors to invest into the stock.
Okay. Deven, a lot of the notes, a lot of the brokerages on Reliance have price targets closer to 3,000. I remember, I think JP Morgan, Kotak, among some names. Do you concur with those kind of targets? Where would you see Reliance over the next, let's say, 12 months? And what are the main triggers that shareholders need to watch out for?
See, first and foremost, most importantly, the combined balance sheet of the company, the EBITDA is going to be 1,30,000, 1,40,000 crore in the current financial year, which is ending today. And going forward the next financial year, I think it is simply understood that I think 15 to 20% kind of a growth is continuing in this particular EBITDA. So given that kind of an opportunity that you have, in 4.5 year time, we are talking about doubling the size of the current balance sheet of Reliance Industry itself, without considering the fact that you have the new businesses which are now getting shaped up, including the renewables. If the renewables getting delivered somewhere in 24, 25, maybe in parts to begin with, I would think that on 75,000 crore worth of investment in renewables that they are making, at a full scale level, I think that in itself, I think holds the potential to generate around 2 lakh crore worth of revenue and somewhere around close to around 80,000 to 1 lakh crore worth of EBITDA on that business, which is absolutely, I think, not immediate future, but somewhere in 26, 27 onwards, we'll start seeing this particular number coming in. So I think sum it up all together, the current businesses in which the company is operating without the financials and the renewables coming up thereafter, the size of the balance sheet is something which is significantly large, 3.5 lakh, 4 lakh crore that we are talking about in form of EBITDA, which is absolutely fair, I think, given 26, 27 or 28 financial year in which I think they can possibly unfold this particular prospects.
Okay, so you'd be a buyer, Deven?
I continue to hold the investment,
Okay.
and every fall has given me a little opportunity to add further into the portfolio.
Okay, well, Devin, thank you very much for working the numbers
Thank
and
you.
doing some of the math for us. I think it puts the opportunity in context, and then we need to wait and see how the next couple of months, years, and quarters unfold and what lies ahead. But I think shareholders will really look out for the demerger process to go through. Thank you for joining in.
Thank, thank you so much, Surabhi. Thank you.
All right, with that, we come to the end of this edition of Who Moved the Market. Before I sign out, must talk about an important disclaimer that Reliance Industries is the owner and operator of the channel CNBC TV 18, along with all of our digital properties. Well, we hope you found the conversation fruitful and interesting. We'll see you again next week.